So last time we were here for 2.5 hours, and unfortunately we have a hard deadline today of 17:30 UK time. I've got this cool school parents' evening type bollocks that I have to go to, and I'm under strict orders from wifey. So, and we have a lot of questions. I'd argue that we've had more questions for this session than our previous session. So I have to be super strict with timing. So when I was doing the timestamps of the previous one, our answers were like, ranging from 3 to 7 minutes long. So unfortunately we can't do that today. So I guess myself and Jim are going to try and keep as quiet as possible until we get to the audience questions, because a whole bunch of people put some Twitter questions in, so I've recorded that. But really, we're here today to really get under the bonnet of mining, because a lot of people here are not miners. And, like in life, I always trying to go to the people that are actually doing the do, not instead of being, pretenders. And so we've got two actual practitioners here that know their shit.
Hey, Siam, you dropped out for a second there.
Oh, no. What did you last hear?
We heard a good bit of that, but maybe
Okay.
the last 10 seconds.
Cool.
Yeah.
Oh, fair enough. Well, I was just saying that we've got two practitioners here, as in the mining industry, that actually know their shit. So first of all, let's bring it to Josh. Josh, who the hell are you?
Well, hello. Yeah, I'm Josh. That's a good place to start. So I'm the CEO of a company called Easy Crypto Hunter here in the UK. So I now own one of the largest GPU specialist mining hardware providers. So we actually build and manufacture equipment ourselves from scratch. That's all done in Manchester, in the middle of the UK. So I set that up quite a while ago now, so that was back in 2017, so coming up to 6 years in the hardware space now. So we very much stick on the GPU side of things. For all, obviously, I'm a big personal fan of Bitcoin. We have built the business particularly around getting normal, quote-unquote, people, normal business owners into the crypto mining space through the GPU angle, and now work with over 300 different clients across the UK and internationally, which include over 65 renewable energy sites. So that's everything from hydro, wind, solar, anaerobic digestion, but we also have a boatload of clients that just pull normal electric from the grid, and have been mining quite profitably in the UK, contrary to popular belief.
Nice. And so Josh has a really good Amazon Prime video type thing where it is really good, mate. And in that, you're basically approaching farmers to turn poo into Bitcoin. Can you just quickly elaborate a bit more about that?
Yeah, so like I said, we've been on quite a few different renewable energy sites over the years now, and one of the forms of renewable power that's often not talked about is something called anaerobic digestion, where you take basically any type of biological matter that can decompose, wait for it to rot, and that produces methane, and you can run that methane through an engine to create power. So you can feed those containers, those storage units, with all sorts of biological matter. So one of the ingredients farmers like to use is cow poo. So one of my farming clients has a dairy farm and uses the cow shit to turn into methane, and then he has all his crypto equipment running away quite nicely there. So we did quite a bit of press and PR around this at the time, and the BBC picked up that story and ran with a nice little article about me called Cow Poo to Crypto, that did quite well, and that was in Times and Forbes and lots of different publications. And then that got picked up by an American film studio who wanted to fly over and make a documentary about it. So fast forward, after 4 months of filming, there's now a little Amazon documentary that you can see called Crypto Farmers, which is all about my business and the bizarre come together of a crypto mining company and the British farming world, which are two worlds you'd never think would come together, and how actually those two things are working quite nicely.
Ah, nice. I'm going to come back to that, and you should hook Alex up with that video crew, because they would make a really cool episode about that. So Alex, who are you, mate?
Yeah, so to go by Alex, I am the CEO and founder, or one of the co-founders of Fraction Mining. And essentially, our background specifically is focused on using renewable energy sources, predominantly either wind or flare. And I think to kind of Josh's point, when it comes to mining crypto, just in general, innovation is one of those key aspects that is a precedence of the ecosystem that hardly ever gets talked about. It's not something that gets talked about a whole lot, but who would have ever thought they would take cow poo and use that to mine cryptocurrency? So the innovation portion of anything crypto mining related is a fascinating subject in and of itself. But for us, we don't use cow poo as far as methane production, but we do have in Canada natural gas site where we take the Australian gas site essentially up there, where we take the flare, put it in a generator, and use that for powering of our operation there. And then our Texas facility, which is a 5 megawatt facility currently, is predominantly wind solar off of around a 912 megawatt wind farm by a very big energy company in the U.S. Down in Texas. So, but our approach to cryptocurrency mining was more of making crypto mining simple. When it came to the industry of the complexities of getting into mining, the cost of getting into mining, essentially all those barriers to entry, we looked at it and we said, how can we break down those barriers to mining cryptocurrency in a very feasible, safe approach? And as a YouTuber, I have connections with a lot of YouTuber friends, some of the biggest YouTubers in the world. Some of the biggest crypto mining YouTubers. Voscoin's a good friend of mine. Hobbyist Miner, you pretty much name the YouTuber, they're probably a good friend of mine. And so the constant narrative that was oftentimes shared was people wanted to get into mining, but they didn't have the money. Maybe it was too expensive. They lived in California, they couldn't. But there was something else. You live in an apartment, you don't have 240 volts, and you want to get into mining with ASICs, maybe not specifically GPUs. So our approach was to fractionalize, break down those barriers to mining cryptocurrency, lower the barriers of cost, and essentially we grew out of that. And on top of that, we're looking at making the process simple as to when someone starts getting hosted, that their miner itself is going to be on chain. So if they want to sell the miner to someone else, it's not going to include all the packaging, shipping, etc. So just overall making the crypto mining experience simple.
Nice. So you have two spaces, as in two operations, one in Canada and Texas.
Yes, correct. So the one in Texas has been there since April, and then the Canada one is a lot more recent, up in Calgary, and it's going to be one of many sites. There's a lot of stranded natural gas sites in Canada, so it'll be one of many up there.
So your videos, when you're in that, basically looks like the desert. I guess that's Texas then.
Yeah, Texas, that is the desert up there, yeah, 100%.
So you said it was a 5 megawatt operation in Texas. So for the average Joe that doesn't know anything about electricity or mining, can you put that into context? What does 5 megawatts look like? Is that a small town's worth of electricity or what?
Oof. I'm trying to think. So about a megawatt, if I remember my stats correctly, is about 20 to 30 homes.
Okay.
You might want to fact check me on that. But essentially, when you're looking at from the total Bitcoin miners or crypto miners ASICs you would have on site, about 300 will give you 1 megawatt. So it's about 1,500 machines on that one site.
Holy shit, 1,500 ASICs, roughly, for 5 megawatts.
Yes.
That's a lot of hash rate.
It is.
Okay, so I will be coming back to you, Josh, in a sec, but I just want to keep a follow on in this line. So, Alex, in your videos, when you're going around that desert type site and talking about what needs doing from all the shingle that's going down, etc., what are the main challenges with buying, a big old shipping container and then filling it with ASICs and getting them all singing like you do?
Yeah, I think the biggest hurdle oftentimes can come. I mean, there's a lot of hurdles. There's a lot of things that a lot of people ship their miner. It comes online. They're happy. They don't know what all goes into the infrastructure. I think infrastructure The container itself, they're pre-built, they're pre-spec. That comes fairly simple. They're pretty much designed for plug and play. But when it comes to the infrastructure, when you look at our site in Texas, for example, in this scenario that we have, 85% of the time, there's a very strong winds there. So you have 85% of the time the winds come in from one direction. And so you have to now lay out your entire operation based on how that wind hits your containers. You don't want the wind hitting the exhaust fans directly 24/7 because that can wear down the exhaust fans. You're pushing directly against the louvers. So you have to now position and set up the entire site differently. Now, on top of that, you've got to have the proper power run to the property. You have to have the right transformer. You have the right padding. From the intake side, you've got to make sure that, you can kind of see from the video that right now there's a lot of dirt that's going to be filled over with gravel. So when the miners are pulling in air, you don't want them pulling in dirt. That causes more problems. So it's a lot from the small things on the infrastructure standpoint that really are those key aspects that you may not see for 6 months, 12 months, but long term, they make a really huge impact.
Wow. Because I guess from the average Joe point of view, we think, you just buy a mining rig, turn it on, put an Ethernet cable in, and then jobs are good. But I mean, there's so much more to it. I mean, how often do you have to, if you take one ASIC, how often do you have to change the fans?
So the fans themselves, but on the ASIC itself, right? It also depends on the type of ASIC you purchase. Each ASIC has, whether you're going Bitmain, Canaan, if anyone goes Canaan nowadays, What's Miner is a very popular one. But essentially, depending on the manufacturer, you're going to get a different level of quality. Certain manufacturers have a higher level of quality standards. Bitmain, it's expected to have around a 10 to 12% failure rate. So essentially, if you get 100 miners, 10 of those could potentially have issues. Jesus. So, when it comes to replacing fans and stuff like that, you also have to consider that, you buy an excess of those. And a lot of that, if you replace, let's just say, 2 fans, maybe it's a control board, that can add up very quickly. You're talking about $100, $200, and that directly impacts your bottom line and your profits of that machine. So there's a lot of things like that go into the numbers aspect of actually owning a rig and operating it. But the exhaust fans themselves, typically, if they're properly rated, those aren't really a huge concern. And you just have the extra motors on hand. If one fan goes down, you get it replaced, get the other one repaired, bring it all back online.
Blimey. Okay, so I will come back to that. I've got all sorts of threads, and they're all going to converge at one point. And this next question is for both of you, actually. Why bother? It's such a ball ache going through all of that. Why do you two go into mining? What am I missing here?
Josh, you want to answer that?
Yeah. Thanks, Alex. It probably, there's a whole host of reasons. I think there's something, it depends really where you want to go. If you want to start this kind of top line and get philosophical about it, I think there's something pretty nice about being able to directly be responsible for power in the ecosystem. So, it wasn't that long ago. Obviously, I know it's chalk and cheese now and things have moved on, but the equipment that I sold at one point was directionally a few percent of the Ethereum network. Which is kind of cool. So it's just like, that's a nice thing to be able to be doing. And obviously, once you get to the stage where we are, that's, we've been in the space a long time. Obviously, we're all, and I presume everyone listening to this is reasonably passionate about the space to give up the time in an evening. So it's nice to actually have an active part in, being a real participant of growth. And for me, the model that, I guess similar to Alex's model is that for all, rather than kind of maybe, Alex might obviously know more than me, but maybe more of a B2C role where the average Joe can get involved. My business has more rotated around the average business owner. 99% of my business is B2B. And what we've found is that the secondary consequences of that have been really exciting, because we've taken a dairy farmer in Wales, or a shoe importer, or someone who owns an oil company, or everyone that's doing, all these normal businesses. Crypto gets introduced to them, and it's actually a very attractive thing, because now all of a sudden, rather than buying these magic coins that could be internet money that I don't understand, there's a lot of people out there that really enjoy buying physical stuff. So it's really nice to kind of give people access to this digital space in a physical way. So that's something that I've quite enjoyed doing, kind of getting more people in the space, as I'm sure we're all passionate about. Nice. So philosophically, that kind of ticks the box for me. And then of course there are a lot of commercial advantages as well, that I'm sure we can go back and forth on. But yeah, that would probably be the top end principle, and then everything kind of disseminates down from that point.
Nice. What are your thoughts, Alex, on that question?
Yeah, I think Josh had a very reasonable approach. I think there's two aspects that people will look at when it comes to crypto mining. And the first, like Josh mentioned, is from the philosophical standpoint, because if I don't, who will, right? If I don't have the operations running, if I'm not the one protecting, if I don't have the machines online, if I'm not security in the network, who will, right? And if no one wants to take the initiative to be that person that's securing the network, then no one takes the initiative. So you're really contributing to something much larger than yourself. And so I think from that standpoint, there's a aspect that people do it. It's the same way that some people will run inefficient machines because they do it more for these philosophical reasons or for more personal reasons, and not necessarily the monetary aspect. Now, I think from a monetary aspect, there's a lot of value that a lot of people perceive when it comes to getting involved in the industry. There's ways to get involved from the infrastructure standpoint of kind of how we look at it and kind of how Josh looks at it, is when you consider the fact, and this is massive in the U.S. specifically, is flaring, specifically stranded oil, gas sites, etc., especially also in Canada, is you look at these environmental solutions, all these different conversations that are had, and really they are only conversations as to how to reduce greenhouse gases or how to reduce emissions. And it's all talk, and there's oftentimes no application. There's no actual actions being taken. And on the opposite end, you have crypto mining enthusiasts and industry leaders who are saying, well, here's the problem. The flaring is a problem. How do we solve that? We take that methane, put it through a generator, clean it up. So by the time that it actually gets released, it's much cleaner than flaring it or releasing it directly. So you're solving a worldwide problem with cryptocurrency through a process, which is the mining aspect. So there's a lot of ways that you can really look at it. But for me, those two are the reasons as to why I do what I do.
Nice. So let's say you took an average person who had zero tech skills, but let's say they had $100,000, and let's ignore Kaspa for the moment. Let's look at something like Bitcoin. Okay, what would you say is more profitable, buying 100K's worth of Bitcoin or 100K's worth of solo mining rigs for Bitcoin? Both. This goes for both of you. You, Josh, go for it.
Well, see, that's where it gets interesting, because ultimately we're all playing the same game. No one is doing this if we didn't believe the price of these assets is going to substantially increase. So if I just change that question a little bit so I can give you some direct experience and look at Ethereum, any of my clients that spent $100,000 with me on Ethereum mining equipment 5 years ago, would they have now been in possession of more dollars equivalent today if they'd have bought those coins that mined them? Yes, absolutely. And that's true of anyone that's ever mined ever, because the markets have all moved up. However, this is the real world that we live in, and all businesses are designed on risk versus reward. So no one knew what was going to happen with Ethereum 5 years ago, or no one knew what was going to happen with Bitcoin 10 years ago, and we don't know where Kaspa's going now. But the point is that there is a really tangible mechanism to enter the space. When you buy this physical mining equipment, it carries a tangible resale value. So like all things in business, instead of buying these magic internet coins, which, I appreciate we might not think, but, there's a lot of people that do, you can kind of split the line down the middle and buy a machine that produces assets whilst it's still worth something in of itself. And particularly in the UK, a lot of people don't realise this, but there's some actually very, very sexy tax advantages to buying what is effectively posh-end computer equipment. Predominantly, again, why we work with business owners is we can actually find a lot of people that diversify business incomes in sensible, strategic business ways that can take advantage of these things. So there's ultimately, the answer would be, yes, you'd have had more money if you'd have bought the coins, but equally, we wouldn't be having this conversation if the market hadn't moved to where it was and everyone was washed out. So it all comes down to risk versus reward, and a lot of business owners are very sensible people that like to weigh up these decisions in a calculated way.
Nice. Actually, you bring up a very good point there. So, for example, I run a bunch of businesses and I don't like paying corporation tax in the UK. So for me, it's 24%, something like that, when it's above 250k profit. And so what I do is 3 months before year end, I have a calendar alert that pings me. It says, and it basically prompts me to find out what my liability is by the year end. So let's say I've got 100k of profit I'm going to declare. What I then do is I basically say to myself, I've got 3 months to get rid of 100k of profit. So I pay zero tax at the end of the year. And so you then have to, and then I try and deploy that 100k into legitimate tax deductible expenses. So now you think of it, now you mentioned it, actually crypto mining rigs would be a legitimate tax deductible expense. So I could, or anyone could buy 100 grand's worth of rigs. Year end happens, you've posted zero profits, but it's what I call boomerang money. You've put that 100k out, and that's like a boomerang. It's going to bring income back in. So that's a really good point. So Alex, how the hell did you get all of the money to open such big sites?
Yeah, I would say that the number one thing is networking. Networking is a vastly unappreciated aspect to a lot of things, especially in the crypto mining industry. A lot of it is who you know, and connecting to the people with the resources that you have. Now, for fraction mining specifically, starting off the company, I sold off my GPU farm. If you call it a GPU farm, it was about 35, 40 GPUs that I had, and they were all somewhat relatively decently priced. They were all 30 series. So a lot of my startup capital was personal, and then between myself and the three other co-founders, the aspect that made us unique is we all had experience in the different portions of the industry we were getting involved into. So we didn't have to hire on or make expenses outside of our area of expertise. And then we leaned on the knowledge and connected and networked with the people who had the money to spend, because ideally you'd rather spend someone else's money than your own. And so it's the reason banks exist. So, when you consider the aspect of how we got started, I had experience in the social media marketing side of things and experience on generators, specifically with my time in the Air Force, on working on generators. And then, our other co-founders was a master electrician, so he knew everything from an electrical standpoint. The other is a full stack developer for NATO and the DoD. And the other has a lot of experience with mining companies in the mining industry. So all of us kind of combined brought the talent that otherwise would have had to been outsourced and much higher cost, especially from the developmental front. So I think really it wasn't bringing in a ton of money. It wasn't really, we didn't have any investor capital. It was all bringing people together that wanted to have the same result. And that's kind of how we got started.
Nice. So something happened last month, which was, I think, truly groundbreaking. So I don't like using the term the elite, or let's just say the establishment. They've been poo-pooing crypto for years and hating it, and just like anything else, they're eventually gonna get in on the trade, just like the big banks during the subprime mortgage collapse and with Michael Burry and the Big Short and all that. And so guess what? As part of them now getting in on the game, like BlackRock, Vanguard, Fidelity, etc., KPMG last month produced this epic ESG report, basically saying that Bitcoin is now ESG friendly. It's essential for helping climate change in the positive way. It's not used for illicit purposes, blah blah blah. And they're completely pivoting, which means big companies now, banks, billionaires, countries, will lean on studies like that, saying, hey, this actually ticks all of these bullshit ESG boxes. Bitcoin's great. So I guess this question goes for both of you. How long do you think until all crypto mining is from renewable sources?
I mean, I think, again, the stats are near impossible to get with certainty, but there are studies out there that already suggest over 70% of crypto mining globally is on renewable. And just as a raw economic exercise, that makes great sense to me, because ultimately mining at source, just as Alex is doing so well, is so much cheaper than the infrastructure cost of the grid. So that figure sits quite well with me, certainly from my experiences over in Europe. But it probably will be some mandated thing in which all crypto mining needs to go in that direction. But again, that's certainly fine by me, because as Alex is quite rightly doing, and we're doing over here, there's some genuinely very, very good use cases to tick those boxes and do a bit of good in the world and make some crypto along the way.
What do you think,
Alex? I think a lot of it is with the change of when originally a lot of Bitcoin mining started, right? It wasn't very, or people would consider it to not be very environmentally friendly. But in order to grow an ecosystem and to expand essentially to a more global appreciation and approach to cryptocurrency mining, mining enthusiasts, mining companies started to realize, to say, hey, if we truly want to look at the adoption aspect of the mining industry, we need to approach this directly with showcasing how cryptocurrency mining solves a worldwide problem. And it doesn't necessarily solve a problem if you just connect it directly to the grid. It solves an ongoing problem by capturing flare, where, in the US, you've got so much flare, and a lot of these companies have to buy carbon credits. So there's a whole industry around it. But essentially, it's one of the reasons why one of the larger companies in the US recently raised about $300 million to only specifically focus on directly mining cryptocurrency using what's previously flared gas. So it's a industry solution that everyone wants to get their hands in the cookie jar, because now they have something that not only solves a worldwide problem, but at the same time also produces a source of income.
Nice. So just humor me. How long roughly do you think until, let's say, 99.9% of all crypto mining is renewable globally? What's your best
I don't know
ballpark?
about that one.
Yeah, well, I mean, I think until it's 99.9%, I think that will be a long time. It's going to be another 10 years, because you've got to account for all the domestic people in lesser developed countries where, you've got those secondary dirt cheap costs from, dirty fuels. But in terms of the majority of the world, and in terms of any kind of commercial scale operation, I think they're going to be forced to be 100% renewable within 3 to 5 years. I don't think we'll have any commercial operations that aren't 100% renewable within a 5-year period.
Are you 100% renewable, Alex?
Is for fracture mining is our operation?
Yeah, as in your both sites, Texas and.
So the one in Canada obviously is using natural resources, but it's technically cleaning up wasted energy. Okay. So that's a little bit different, because you have an aspect of solar or wind, which is just renewable, but then there you go the extra step when it's actually taking a harmful substance, cleaning that harmful substance up. So then you have either neutral or net positive emissions, depending on how far you go in that process.
Okay.
But we would be at about 95 to 97% renewable. There's like a 2% coal within our mix in our Texas site, but it's predominantly wind and actually nuclear.
Sweet. Okay, so
this actually, this just makes me realize too, hearing this, that it's actually really cool and still kind of early, like, for the renewable energy. So when you think about the future and the cost of the operational cost of securing a network, if you own the energy production, like solar panels or wind or whatever you're using, and your energy cost is very cheap, then the operational cost is pretty low, and that makes obviously the sustainability for the network even easier.
Yeah, I think there's a big misunderstanding about renewable energy. I mean, it's a question I've got when I've been trying to sell and distribute equipment is, why would I want to do something that's so bad for the environment? You're just running the computer for no reason, right? So there's this huge educational play because people, one, fundamentally don't understand the value of processing transactions because they don't see the benefit of the assets themselves. That's a separate issue. And then the second issue is that they don't understand the problems that exist within the energy grid system. People's understanding of that sector is terrible. So whereas obviously we don't have a lot of flare gas or virtually any in the UK, what we do have is the entire UK energy network of every single type of renewable energy in the UK that's deployed today was built off the back of historic government tariffs where you got paid for deploying this equipment a certain pence per kilowatt into the grid. But as the years have gone by, that pence per kilowatt incentive to deploy new equipment has reduced to what is now last year zero. So if you're a farmer or a business person that wants to deploy renewable energy in the UK today, there is near zero incentive to do so, because the thing that people don't understand is that the raw grid infrastructure in the UK is now at capacity. So new solar farms are coming online and you can't even get connected to the main grid site for sometimes 4, 5, 6 years. So there's huge amounts of money that are being deployed in capital resources that people don't realise that things like deployable crypto mining, be it Kaspa, GPU, Bitcoin, whatever, there's very, very few large-scale power applications that can be remotely deployed upon point-of-source power production, and that is a concept that the general public just simply don't understand. And actually, I've always argued the point when I'm doing my stage shows and the documentaries that crypto mining plus renewable power truly is the way to save the planet and move things forward if you're that way inclined. And it's a real shame. It's a real shame that people have truly got the wrong end of the stick. But like most things, a little bit of knowledge is dangerous, and people don't often get deep enough into this to realise that the two things are actually a match made in heaven.
Awesome. I'm going to have to be as polite as I can. We've spent 35 minutes going through, I think, 7 questions now. So if we can try and keep our answers maybe a minute shorter in the nicest possible way, in order to finish, because we've got 55 minutes left. But I mean, I'm enjoying this massively at the moment. So next question. It's sort of a double-barreled question because it's a contentious issue where I don't think anyone really has a clear answer, and I'd like you two to dispel the myths surround it. So what are your thoughts on higher hash rate equals more security? Because, I mean, I guess the general consensus is that, if the hash rate starts growing massively, it then costs a lot more for someone to do a 51% attack, etc., etc. And, it's the monetary penalty to do so which is the hindrance. But you have people on both sides of that argument. So, Josh, you first, and then Alex. What are your thoughts on that topic?
So as a GPU hardcore guy, I very much take the point up front that I may have a biased opinion, but 6 years in the industry has given me plenty of evidence to base this thought. So if we're talking in terms of Kaspa, which obviously we will do for today's purposes, I really, really have a lot of good things to say about Kaspa, as I'm sure we all do, which is why we're here. But I genuinely believe that what would have been the perfect formula for the next stratospheric coin has been done a disservice by the move to ASIC. Ultimately,
Whoa.
yeah, I genuinely believe that Kaspa would have been a bigger project ultimately should it have remained on GPU, because even to this day I feel that Ethereum moving to proof of stake has not been necessarily a good thing, particularly for the communities that have spent years building up those things. So the thing with GPU more so is that it's more accessible for the average Joe, and the average person can get into it. Obviously it goes back from Satoshi's original vision from one PC, one vote, and the average person has access to get into that. Now, obviously, in the modern world, it's more specialised equipment, but what we end up having is a situation now where Kaspa, for example, would argue, oh, well, we need ASICs to secure the network, so we'll bring out these machines that are super, super powerful and way more efficient, which they absolutely are. When I was mining Kaspa 12 months ago, a KS3 miner mining Kaspa today is a KS3 is 800 times more powerful than the best mining device that we manufactured. So it's phenomenally more efficient. But the problem is that this is often done in the guise of security, because to my knowledge, which I admit I may be wrong about, but there is no technical reason as to why we need ASICs to secure the network in terms of the blockchain and the process and the technicalities of how it works. You could argue that works just as fine with GPU. The argument that often gets made is about efficiency and security, but the reality of it is as we've all seen the hash rate chart as we've been following it the past few months, work for the past 18 months has been on GPU. It's reasonably difficult as that project grows. Again, if we look at Ethereum as the example, even though ASICs did end up coming out on the network, it was virtually impossible for the Ethereum network to get attacked due to the sheer size and scale. So in the argument that efficiency of ASICs is better, what that actually does, particularly in the short term, is make the ability for the network to be vulnerable exceptionally high. Because all it would take in reality is a very small group of people with a first batch order of KS3s to have complete domination of the network, which practically would have been much more difficult if we were still on GPU, given not impossible, but much harder.
Okay. So, bombshell. Alex, what are your thoughts, the original questions, and then also what Josh was then talking about?
Yeah, I think there's an argument for both sides of the spectrum as to, does more hash rate equal higher security? I think it's all in the placement of that hash rate and to the point to where you get there. Because to Josh's point, when Bitmain, obviously the largest manufacturer in the world, manufactured a bunch of these, which was obviously after Ice River did, there's nothing stopping from a bad actor, maybe possibly a Bitmain, turning all these on and now having more hash rate than the entire network at that point had, right? And even into the Ice River point itself. So to say that there's an argument to, when you look at prior history, because oftentimes history doesn't repeat itself, but it does rhyme. And I think in many ways, what's happened with Kaspa has 10x the speed of what happened with Ethereum when ASICs came online. So I think it's a very interesting argument. I do say that, as a broad concept, a higher overall amount of hash rate, if you look at, for example, Bitcoin right now, it's much more difficult to do an attack on Bitcoin, but at the same time, those who would be capable of it are not going to be your smaller individuals. Those are going to be the companies with the capabilities and the funds to be able to do so, because it's going to simply take a lot of money. And when you look at where Bitcoin is today, you can make the argument that it's a lot more secure than it was back in 2010, 2011, simply due to the cost aspect that it would take to try to do an attack. So I think it's a very interesting argument. I don't think there's a clear winner and a loser, but there is definitely an aspect to risk when you bring on ASICs. I think it's one of the reasons that you're seeing Ironfish have that concern to look to change their algorithm to make it ASIC resistant. Just my thoughts.
Nice. Okay, so Shai, we had you as a speaker there. I would love to hear your thoughts on that. I've sent your sort of speaking invite, but whilst that happens, good answers, everyone. So we'll come back to that if Shai can get the mic. But so is it? Obviously, it's not that easy buying stuff from China / Bitmain. Like, how much of a delay did it take for you to receive your KS3s? Alex.
So we currently, we haven't ordered KS3s from Bitmain. There's a specific reason as to why, and this is a whole nother conversation as far as the timing aspect of do you get the first batch of any ASIC that's produced for a network that has a low current hash rate. You look at Cadena as an example and the repercussions that occurred. And so there's very much a strategic and a timing of the market aspect when it comes to the mining industry, especially for new altcoin ASICs that come out. But we're also in a conversation right now to be a distributor in the U.S. with Ice River. So there's an ongoing conversation for us to be their North American distributor partner. And so for that aspect, we've been waiting to get the go-ahead from Ice River, but it looks like we'll probably have a direct partnership with them.
Nice. Shai, go for it. Oh, you're teasing us. You're a speaker and then you weren't. Wait, here we go. We've got the request approve. So for those of you not familiar, Shai is one of the main core devs and co-authors of Ghost Dag, I think, and Dag Knight. Go for it, Shai. What are your thoughts on all that?
Hi, can you hear me?
Yep, loud and clear, buddy.
Yeah, okay. So just a few points I wanted to make about everything you said about the ASICs and GPUs thing. So first of all, you shouldn't be thinking about this in terms of hash rate. Hash rate is not a good measure on its own. I think the way to think about the costs of attacking the network are in terms of operational and capital expenses. You should ask yourself, how costly would it be to purchase enough hardware to do so? And how much electricity would someone have to put in to do so? So in these terms, I think that the high capital expense you have on ASICs is actually providing better security while requiring less energy overall. I think this is a good thing. Another point is about the security provided by ASICs. When we say that ASICs provide better security, we don't mean to say that ASIC provide more hash rates and are thus more secure. We mean to say, one, that the scarcity is not a scarcity of energy, it's a scarcity of designated hardware, which is kind of rare, but more than that, the security is due to a more stable hash rate. You don't, since the hardware is designated and it only has one way to use it, one coin in which it is usable, then you don't have this phenomena of switch mining, of having the hash rate fluctuate a lot to respond to action. So, suddenly one coin is booming, so everyone flocks their GPUs to the other coin and then they come back. And this is bad for security, and it's much, much worse when you think about coins which provide fast confirmation times, because if these fluctuations are on the order of much larger than the confirmation times, then it harms the security in a way which is tangible to network user. And my third point is that designated hardware always win in the end. If you're talking about Ethereum or any other coin, if any coin, the most ASIC resistant coin you can think of would have a market cap of, $1 trillion, then the ASIC will come. Yes, they would not be 10,000 times more efficient than GPU, but just 100 times more efficient than GPU, but they would be strong enough to make GPUs non-competitive. So you would eventually lose in this race, and the network would become ASIC dominated, but you would also lose from the other end. You wouldn't have all the benefits of ASICs, such as making it impossible to use generic hardware to attack the network, even if it's not sustainable for the long run. And the fourth point I wanted to make is that one of the reasons GPU miners like Kaspa so much, and a lot of them mind it so much, is actually because it is ASIC friendly. And because one of the things we heard a lot about why people like to mine Kaspa is because it's nice to the CPU. The GPU doesn't get too hot, and it functions very well and very performantly, and it doesn't degrade the life cycle of the GPU as much, and essentially it's much nicer to run. And the reason for that is exactly because of ASIC friendliness, because the techniques that are used to make ASICs harder to create also cause GPUs to be less performant, and they cause them to heat more, and all of these detrimental effects. So in some sense, one of the things that drew GPU miners was the choice to use a very ASIC-friendly algo.
But what would you say to those that say, well, ASICs just make Kaspa way less decentralized because only people with bags of money and the know-how can then do it?
Well, I'll say several things. First of all, it is true that ASICs couldn't be as decentralized as GPU. There is a trade-off here. But what you also need to ask yourself is how many ASICs, how much equipment you need to have to be able to mine, and what is there to mine. And the high BPS and ITPS make it so that you need a much, much smaller fraction of the network to be able to mine competitively. The reason that you need huge hardware warehouses of ASICs to mine Bitcoin, even in pools, is because Bitcoin has very slow block rate and very slow transaction rate. So you have a lot of time you would have to wait before you would see a block, would see any profit. And if in Kaspa we have 6,000 times more the blocks, it means that the amount of hardware, the fraction of hash rate that you need to see a return on the same time is 6,000 times smaller. So it's plausible. Okay, so I get that $7,500 is not spare change, but it's not corporate level money either. And I believe that for a long time we will be in the regime where someone holding a single ASIC or two ASICs would still be able to mine profitably and not have to wait 5 years to see any profit.
Nice. Shai, thank you so much for your time. It's very much appreciated. Yeah, thank you, sir. So I'm just going to change the type of questions now, moving away from, or not necessarily the ASICs. First of all, Bubblegum Lightning is here. I'm reading your book at the moment, the Book of Kaspa. Good effort on that, mate. It's thoroughly enjoyable. So next question. I guess this goes to both Josh and Alex. Do you, when you see a new ASIC launch, let's say the new KS3, which is 9.4 terahash, do you just ignore the anticipated yield because you know the rigs will always get delayed, the hash rate and difficulty will then shoot up, and before you can even turn them on? How do you calculate your actual realistic ROI on them?
Looking at what the figures say when a new miner comes out is the equivalent of expecting a girl to look like a Tinder picture. It's not happening. So yes, I think anyone that's been in this space long enough to realise that, I mean, the facts, when the numbers come out, they're obviously correct, but people fail to understand just the impact of difficulty increasing as quickly as it does, and obviously that's quite a hard calculation to do because you've never got quite a full understanding of how many units are going to be sold and the timeline for such. But yeah, when the new numbers do come out, I think when the KS3 first came on the scene, it was something stupid like $3,500 to $4,000 profit per day when it was first advertised, and obviously today, just a couple of months later, that number is obviously nowhere near that. So you definitely have to take these things with a pinch of salt, but quite where you have to draw the line in reality is a very difficult thing to do. But again, that's almost a difficulty with ASICs, because when we had the KS0 at 100 gigahash, even now 3 or 4 months later, we've got devices that are 9 terahash. So we've already got a device that's 90 times more powerful. So it's quite a wild tech cycle.
What are your thoughts,
and again,
Alex? Oh, sorry, Josh.
That makes it very difficult to predict the future.
Nice. What are your thoughts, Alex?
I don't think I've ever heard anyone use that illustration before, Josh, but I'll definitely have to put that in my bag for any time someone asks. But essentially, it's almost it's something that when you look at it, you have if you don't know how things work and how those numbers are drawn up, it can be very easily to FOMO into something like that. And I think that's the problem with a lot of these websites that will show like ASIC prices and then show the profitability. Because a lot of that, for someone who's very new to everything, it's going to be very, very misleading. Because that's based on where the hash rate is at that point. And by bringing just one of these machines to that hash rate at that specific time of day, that would be their earnings. But you're not taking into account for 2,500 of those machines getting, and now you're having to 5x the network hash rate. And the numbers are significantly less. It's the same issue that happened with Cadena, and everyone freaked out when they went from earning $64 a day to now $5 a day. So the only time that doesn't get impacted is when you look at Bitcoin and a new, the S19K Pro comes out, or the new S21 series is coming out. So I think for us specifically at Fraction Mining, we always wait to see what the impact of batch 1 is, because we also know that those same misleading prices of the $3,500 a day is the same way that those manufacturers sell those ASICs to those individuals who are FOMOing into that price point and that profitability. So it was the same reason that if we take the most recent example, the KA3 went from selling at $10,000 to $11,000 now to $2,800 after second and third batch. It's the same way that you have your KS3 by Bitmain no longer $50,000. Now you can get it for half the cost, and I assume that probably within a short period of time you'll find these for under $20,000. Now a lot of that also, there's multiple aspects, the overall emissions, the block happenings. There's just so many other aspects that take into account when you buy and how you buy and where you buy. And so it's like, do you buy spot or futures? I did a whole video on that, talking about, do you buy spot and pay a premium, an extra $5,000 to get an ASIC in a week, or do you buy a futures order that's going to be $5,000 less? And in that calculation, you have to look at how much hash rate is coming online, what's the price point, will the emissions, there's so much that goes into it, but on average, we'll wait until after the first batch to make any decisions.
Okay. So Bitmain sold 2,500 KS3s for batch 1. How many do you think they'll sell in batch 2?
Knowing Bitmain, that they'll probably continue with similar batch sizes, or if anything, they could possibly increase. There's a fine game to the manufacturers that they want to keep it still very profitable and appealing, so they can sell on the higher margin, because it doesn't cost them $25,000 or $30,000. I mean, it doesn't cost them $50,000 to make these machines. But as long as the profitability stays there, they can continue making 10, probably like 20x margin on some of these devices, right? We saw that with Cadena, right? They're selling these devices for $2,500. When they sold them for $10,000. It doesn't mean that they're losing money by selling these for $2,500. No. Their cost probably is $1,000 or less if you know how they work things. So I wouldn't be surprised to see at least another 5,000 to 7,000 units coming from Bitmain.
Wow. And will you personally be buying the new 9.4 terahash KS3s?
Right now we're in that discussion with Ice River. So right now, from a pricing standpoint, the KSM, I think it's KS3M by Ice River, is the most appealing to us currently. from a price point standpoint, hash rate standpoint, etc. So right now, if we do become the official distribution partner for Ice River in the U.S. North America, then most of our dealings are going to be directly through Ice River. And from the aspect, you always want to partner up with the little guy. Getting into the mining industry, manufacturing industry specifically, is ridiculously expensive because of the sheer amount of chips you have to buy from these chip manufacturers, not to mention a chip shortage. So to even get a slice of the industry is hard enough, but to be successful is a different story. And Ice River is really that small guy showing a lot of success.
Nice. So I'm just trying to understand the total negative buoyancy that miners have on Cas right now. So on the Kaspa website, you can find the Kaspa emission schedule. It's a nice little PDF. And I think, so at the moment, so in this month, we should have 459.2 million Kaspa mined. So divide that by 30, that gives us around 15.3 million Cas mined, which means times it by, I guess, a current price of 0.45. That means if all miners were to dump every Kaspa that they earned every hour, every minute, every hour for every day for this month, that's only 688 grand per day of total negative buoyancy. Now, obviously, miners not going to be dumping 100%. So, as a rule of thumb, is there a percentage of daily returns or daily Cas earnings that you would dump just to maintain OPEX?
Well, I mean, I'll answer this on my end. I started mining Kaspa August of 2022. So I've been mining Kaspa for a very long time. I didn't sell any of the Kaspa that I mined for over a year. Not because it was focused on CapEx, and everyone has a different approach, right? For a lot of people, they'll take the hit from or technically the OPEX, the operational expenditures. They'll take that hit because they perceive the value of the native token that they're mining. And for that instance, Kaspa's done a 52x from the point when I first started mining it. So if I had sold it off at the point which I mined it, it would have been one of the most stupid mistakes I'd ever made. So luckily I didn't take that approach. I think it's different. If you're GPU mining, obviously the level of power consumption is much lower. If you're ASIC mining, it's much higher. Then you have to consider your cost of entry. Some people are going to focus on directly ROIing, others not so much. So I think it's a different approach. With ASICs, I can speak to that. For us specifically, we're not going to be looking at trying to get our cost offloaded, essentially. I know many will, but for us, we're not. I'd love to hear Josh's thoughts on this, though.
Yeah, so similar to you guys, Alex. I mean, obviously, Kaspa ticks a lot of boxes. It looks like a great project all around, and that's certainly given us and my client subsequently the confidence in the project. So of the many hundreds of clients that we've got, I'm sure there may have been some that have been selling, but that's certainly not been the feedback for the vast majority. The vast majority of our clients, again, maybe I appreciate there's an extra ability to do so because a lot of people are running this as a business cost, but a lot of people are very much holding those assets, and again, receiving some of those historic gains that Alex is going on about. So with these smaller cap coins, there's definitely a desire to hold them, particularly. So as a percentage, Siam, I would probably, I know I'm fingering the air in the number, but I would suspect it's going to be 30% at most, 30-35% of daily emission being sold.
Fair one. Yeah, because this was my main concern. Back before the hash rate exploded, we all saw that hash rate was going to explode once ASICs were allowed, and then it did. And but I'm looking at the 24-hour trading volume of Kaspa right now. It's $16.5 million. So even if all Kaspa was dumped every single day, that's only 688 grand. So in terms as a percentage of that ADV, average daily volume, I think it's not really a concern of mine anymore. So I'm curious, this is for both of you. You've both been in the game for a long time and you've mined all sorts of stuff. What attracted you to Kaspa in the first place?
Do you want to start, Alex?
Yeah. So when I first discovered Kaspa, it was essentially out of my my 3 gigahash Ethereum farm. I was like, okay, so what am I going to do with all my GPUs? And so at that point, I started researching, and I ran across Kaspa very early on, and it was the technology aspect that really drew me in. And so at that point, and I put out a post about this, I was actually losing money every day for a substantial period of time mining Kaspa. And so that's the approach for a lot of people, is they'll mine it not due to the profitability, but it was due to the understanding of the technology and the potential of the technology having value long term. So that was at least why I started mining it, and I'll continue mining it until 2037.
Wow, legend.
Yeah.
What about you, Josh?
That was a virtually identical story here. Obviously, we have loads of GPU power, and obviously we've been looking around over the past 18 months for alternative coins to mine, and again, Kaspa was a great coin because it ticked a lot of the boxes. It was fair launched, there was no ICO, it was open source, it was doing all this great stuff. And then again, as one of the other speakers previously said, one of the attractions, obviously with electric price generally being higher in the UK, was that Kaspa was a low powered algorithm. On a top end GPU rig, it might have been doing 750 watts versus 12 or 1300 watts that other algorithms would have done. So it was 70% less power. So it's quite exciting in terms of its practical applications, which was very good. A lot of people liked it, and it was one of the coins that we picked up. I think October, November last year was when we picked that up.
Nice. So seeing as the hash rate has spiked, do you think there are any other big miners that are waiting to get into Kaspa? Or are they like, screw it, missed the boat?
Well, I think there's still a lot of opportunity. I don't think anyone's considering that they missed the boat. A lot of people are considering that they missed the boat from not mining more during 2022, including myself. Because at one point I had everything on my farm mining Kaspa, and then I really split it up. It was really a strategy because I wanted to get a little bit more, because when Ethereum moved to proof of stake, there was 3 or 4 other proof of work relatable GPU mineable cryptos that came out, and I was like, well, let me spec mine, as the term is, some of these as well. And really what I should have done is just strictly stuck to Kaspa. But I think everyone's looking at that in hindsight 2020, same thing that they did with Bitcoin in the early days. But I think there's still a lot of opportunity, there's still a lot of years to go, and there's still a lot of ways for Kaspa to go up. And on that note, I've got to go through airport security real quick. So nice. I'll be muting myself, but I'll be available in like 3 minutes.
Amazing. So I ask, okay, I'm going to wait until you come back. So let's flip forward to Josh. I'm going to skip forward a few questions. So the previous question, I'm going to wait till Alex is back. So just let us know when you're through security, Alex. So Josh, with the advent of AI and all the new AI projects of decentralized computing, etc., why don't you just sack in crypto mining altogether and just go all in on AI GPUs? And that way your rigs will always have a use and repurposeful use.
Well, as a commercial enterprise that our main revenue driver is the manufacture and the sale of equipment, Siam, that is exactly what we've done. We have now basically we've spent the last 12 months very, very heavily doing R&D to develop what now is our newest miner, which will be, we're now taking pre-orders for, which effectively uses very high-end computer-grade GPUs. So we now use the A4000 enterprise cards, which are great for machine learning. We stick them in a system which effectively is a very, very high-end mining machine, or pretty much now a low-end data center server, and effectively you now have a machine which A, can mine crypto, or B, you just simply run a different software program, and now it's renting itself out for AI and commercial application. So now for the first time we're bringing to market a magic box that will pay you either A or pay you B. Same bit of kit, different workloads, and ultimately we now have ultimate flexibility to deliver value to our clients whichever way the market moves.
Whoa. Okay. So, what is the profitability like with AI GPU mining compared to, I don't know, whatever the best proof of work mining coin is?
I mean, the best mineable coin at the moment versus what you're earning on the AI side of things. I mean, right now, honestly, is an unfair comparison because the crypto market's on its arse. And this is going to be a new type of equation because, as me and Alex both agreed, when we were mining Kaspa 12 months ago, we were breaking even / making no money, but now it's done a 50x in 12 months. The advantage of AI workloads is that today you're earning dramatically more money. So I can earn 3, 4, 5, maybe even 6 times the revenue on a system today in AI income. The advantage and disadvantage, if you would, is that you get paid in pounds and pence or dollars. So for those people that want the shorter term cash, running AI workloads now is phenomenally more valuable. However, you're not going to get any type of gain on that cash, and in a year's time, inflation will have taken away another 10% probably. So
who pays them? So if I'm an AI GPU miner, who pays me?
Well, again, if you're in the space at the moment, there's quite a few different ways in which the AI workload space works. So as our business grows now, we're looking to kind of interact on different sides of that. So there are now quite a few companies that are effectively third-party applications where you can upload your server to, and anyone can go onto those websites and rent that computational power. So you can effectively just add to the pool of GPU resource, and you're able to move forward in that respect. Okay. Where the big money is if you negotiate individualized contracts with universities, small businesses, where people need dedicated hardware for 3, 6, 12 months, then, some of the mining rigs at the moment, our best mining rig at the moment that might have been earning a few $100s a month, the same device is being rented out on the highest end providers for $1,500 to $2,000 a month. Nice. So there's absolutely huge revenues available should you find the right contract. So now the hardware has got this second utility, which it never did before. So I now see my business model changing quite substantially. Yeah. So effectively, I will move from being one of the UK's largest crypto mining companies to basically a distributed computation business. Nice. Yeah, and we'll do both as whatever works best.
Alex, you back yet? Negative. Okay, so next question then, Josh. Again, this is for you. So for the average retail listener here, that is curious about mining Kaspa, what tips can you give to them?
Well, obviously now you've got plenty of ASICs available that you can go and buy for various different price points. The only thing that I would be mindful of to the average consumer that wants to get into this, and again, one of the reasons why I'm personally not generally the biggest fan of ASICs for these newer coins, is just be very, very cautious of the technological increase in performance of ASICs, because we've had a KS0 and 4 months later we've got a KS3 that's 90 times better.
But surely buying a KS0 will be more profitable than a GPU?
Oh God, yeah. I mean, even today, now the ASICs have come online, a KS0 is still 20 times more profitable. I mean, GPU mining is completely and utterly dead on Kaspa. A KS0 is 20 times more efficient than the best GPU miner. So
can I just ask, like, what's the typical electricity cost per month on a, say, I mean, I don't know if you've broken it down on each of the KS miners, like the KS0 through the KS3 or whatever, but and obviously everyone's electricity cost is going to be different, but like what does somebody expect? Like, are we talking like $30 a month or like $100 a month? Like, what's the typical cost?
So a KS0 is only going to cost you, it depends on your electric, but not even $50 a month. I mean, it's nothing, it's tiny. Whereas a KS3 is 3,200 watts. So let's say you're paying 10 cents per kilowatt. You're looking probably $300 to $450 a month in electric for a commercial grade ASIC.
Nice. Okay. Again, quickly, we still have a lot of questions. what are the pros and cons of solo mining Kaspa versus pooled mining of Kaspa?
So this is a feature that's ubiquitous across all cryptocurrency mining, is that obviously if you hit a block, you get the entire block reward. So people simply don't have the ability to do that these days mining Bitcoin unless you have gargantuan amounts of power, one of these stock listed companies with hundreds of millions of dollars of kit. Whereas at the moment, if you had a couple of KS3s, you probably could quite easily solo mine. So rather than joining a big team of miners and then anyone that hits the block in that pool getting a fair share, you can often do a little bit better. So it's just a maths question, really. It's how much power do I have personally versus how many blocks are found per day versus coins per block versus what I'd get averagely joining the biggest team. It sounds complicated, but it's actually quite simple maths to work out.
So would you not recommend pooled mining then?
For the average Joe, yeah, absolutely. Again, it depends on, there's basically a sweet spot where if you have this much terahash of mining power and above, solo mining will be better. Below that threshold, it will be better to join a pool, and that threshold will increase proportionally to the overall difficulty of the network.
Okay, so treat me like the dum-dum that I am. Let's say I've bought a KS3, a singular KS3, it's arrived in my office. What exactly do I need to do? I'm sure it's not as easy as just plugging it in. Like, what do you do?
Well, I mean, it is as simple as plugging them in, really. You plug them in, you find the IP address.
I'm back, by the way.
Sorry. Alex will better handle this question.
Oh, just one quickly. Shai is requested to speak. Go for it, Shai.
Can you hear me?
Yep, go for it, mate.
Yep.
Go for it, mate.
So, if you have 1 block per second, then a nice rule of thumb is that for every 86 peta of global hash rate, you need 1 tera to see 1 block per day. Right?
Okay, those numbers gone over my head. Could you just repeat that again?
if the global hash rate is 26.4 petahash,
yeah,
right? Then you need a terahash, 1 terahash, to see a block once a day.
Okay. Nice.
So currently we are about a fourth of that. So you need about 250 giga, or like 2.5 KS0s to see a block daily, right?
Nice.
But if we go to when we go to 10 BPS, you would need 10 times less. So when we get to 10 BPS, then if the entire hash rate, global hash rate, is 260 peta, then you would still need a single tera, right?
Nice. And if you hit a block, at the moment, what is that, 174 CAS?
I don't remember what the reward is, but you should also remember that in the long run, fees are going to get more substantial and will be part of the security funding.
Nice. Thank you. That's really cool. Alex, what were you going to say?
Yeah, I think that's a very interesting point by Shai. Is a lot of people have this fear that when you look at almost any cryptocurrency, when the last cryptocurrency gets mined, oh no, your equipment's going to be worthless. You have nothing else to do. And it is a completely false narrative, because you have to consider that you're still validating transactions. There's fees that you're going to earn from. You look at Bitcoin network, right? When oracles came on, some miners were earning more from the fees than the actual block rewards, which was almost ridiculous. So you have to look at something like Kaspa in the same light. As Kaspa grows, as activity on Kaspa increases, there's going to be a substantial portion of the quote-unquote revenues, if you will, coming from fees. And I think that is what you have to look past, because everyone's like, oh, Kaspa 2037 is the last Kaspa mine. No, it's not. It may be the block reward specifically, but there's so much more past that.
And is the fee
another incentive, which I think people aren't aware of, is just that miners, ASIC miners, especially the large ones, they typically own a lot of the coin, and they wouldn't want to see it devalue. This devaluation due to low mining in itself is an incentive to keep mining. It justifies costs.
Yeah, and that's a good point. And the fees, is it a set amount of CAS, or is it, how does that work?
There is a fee market. I mean, you can't impose fees. You don't want to hardwire fees. A general rule of thumb in crypto is that thresholds and like arbitrary values are never a good idea, because I can set the fees to be, I don't know, X Kaspa.
Yeah.
And I don't know if a year from now X Kaspa will be worth $200 and nobody could afford to use the change because of this stupid decision. I mean, the fee should be determined due to a market. People are a bit naive about how complicated fee markets are. I would say that designing the fee market correctly is arguably maybe the subtlest aspect of designing a cryptocurrency, and the dynamics of the fee, how fees work in Kaspa are very different from Bitcoin. I wouldn't go into the math right now, but the point is that in Bitcoin you have this like bidding war mechanic. If you pay enough, if you pay one Satoshi more than, I don't know, the 1,000th most expensive transaction, then you're in. So it's like you're bidding on the cheapest transaction that would be included, and you have like this eBay bidding war when everyone adds one more Satoshi, and in Kaspa it's more of like a probabilistic thing, so people will need to substantially increase the fee to get more chance to be included, and you get this nice dynamic which takes effect. You don't need the network to be completely congested for this to take effect. Like the tragedy of Bitcoin's fee market is that either the network is not at full capacity and then there's a race to the bottom, or it is at full capacity and then there is like this vicious bidding war. And in Kaspa, we see a different dynamic. We still need to explore and understand it better, but it seems that the network could be running at a fraction of capacity, but there still wouldn't be a race to the bottom, and people would be incentivized to pay more fees because of the random selection. And the amount of fee that they pay seems to much better represent the quality of service that they want to get.
Nice. And whilst you're here, Shai, sorry, last question for Shai. I think you're best placed for that. Are you worried about quantum computing with CAS mining at all, or even Bitcoin mining? Is there a way that if I had a quantum computer here right now, would it be a threat?
Oh, well, I mean, there are two ways in which quantum computers are threats. One of them is compromising the signatures. Like I can I see a UTXO, I see the private key and public key, and I can compute the private key and steal the money. That's one aspect. It has nothing to do with mining. It's pretty much the same on all techs. Not gonna get into it. Quantum mining is very interesting. People don't understand that we don't really understand quantum mining at this point. There are very subtle phenomena that we don't quite get. Attacks. Very subtle attacks that we still don't really know how to handle. But the good news is that the size of a quantum computer we would need
is a building.
Have substantial quantum mining, which is actually a compromise, is much larger than the computer we would need to break signatures. You need very large machines, and I don't see them emerging in the near future. We're talking of orders of magnitude larger than what you need to break cryptography.
Nice. Thank you. So,
and just another thing, if I'm at it, so one of the problems with quantum mining is that it seems to, in some subtle way called aggressive mining, increase the orphan rates, which is why they might compromise the security of Bitcoin. And it could be, now we haven't done the math, but it's plausible that because Kaspa is inclusive and there are no orphans, it might be more resilient to, not to quantum adversaries, but to fair quantum mining and its adverse effects.
Nice. And thank you, Shai. That's amazing. So I'm just going to circle back to the question I was going to ask Alex before he went through customs and whatnot. So I asked this question to everyone that has Kaspa. So Alex, what are your main concerns about Kaspa moving forwards? What are the big threats that you see, if any?
Yeah, I think when you look at Kaspa and the attention and the growth that it's had it's not even over the last year. A year ago when I was mining Kaspa, there was not this type of conversation had around it. It also was 1/50th of the price. So, I think with a lot of attention comes a lot of scrutiny. And so I think with scrutiny comes with a lot of FUD. We saw this most recently with a lot of unnecessary FUD. And I think that's really going to be the only concern I have is when you look at the amount of eyes that are now on Kaspa, each decision that gets made is that much more scrutinized, especially when you've brought in the type of money that comes with ASICs. When you kept things small, when you had GPUs, it was individual small voices. You didn't have massive manufacturers, etc. So I think that the concern that I have is not necessarily what most people would say is Kaspa to live up to its hype, right? And I think that's really the bad way to say it. I think it's to Kaspa to fulfill its long-term goals is the proper way to look at it. And that's really what I want to see to come to fruition. And I think there's a lot of people that, based on the type of world we live in, want this instant gratification. There's some people that are going to get very, very bored, and they're going to get very, very tired of waiting. But good things are worth waiting for. And so that's really my concern, is how people are going to view Kaspa's explosive growth right now, because not everything can sustain explosive growth. So that really is my concern, is how people on the outside will look at Kaspa and gain their perspective on it.
Nice. What about you, Josh? What are your big threats, concerns for Kaspa?
My big threat or concern is just, again, harking back to the original, really, which is just whenever the ASICs get involved in the network, particularly with an algorithm that's been so easy for them to get involved with the way it's programmed, is just the sheer technological acceleration of the equipment. We've already seen huge gains. We've not even had ASICs for 6 months, and we've got stuff that's 90 times more profitable or more powerful. So, now there's some big money moving into the space. I'm just concerned there might be a lot of people that get disenfranchised. A lot of big players might get disenfranchised if they're all putting in big orders for KS3s, when behind closed doors Bitmain's already got the KS5 on the R&D bench that comes out in another couple of months. So I'm quite concerned about the sheer scale of the technological advancement and how quick it has been, and the business implications of that on the market.
Josh.
Sorry?
I'm not able to hear Josh.
Oh, you can't hear? I can hear Josh.
Okay, hold on. Let me come back real quick.
Yeah, no worries. So, okay.
Yeah, I can hear him too.
So what would...
Okay, good. I'm not going crazy then.
Yeah. So, from a mining perspective, what would stop you from mining Kaspa and completely pivoting away from Kaspa altogether? Is it as simple as once the ROI is just below OPEX, it'll just stop, or would something else need to happen?
Well, I mean, I feel it's that same point. It's that the hand has got force. So in very real terms now, I now have over 300 clients that were mining Kaspa that are today not mining Kaspa because of the technological change of ASICs, and they'll never mine Kaspa again.
Oh, wow.
So the problem is that I believe that because the technology is moving on so quickly now, we're in the ASIC world, a lot of people that are today mining Kaspa with these smaller ASICs in 6 months or 12 months will be just as disenfranchised, because now we've got 100 terahash devices instead of, once Bitmain gets hold of something, God knows how powerful the equipment's going to get. So my concern is, usually when ASICs have come along, they've not had, we've never ever seen, the difference in the KS0 to the KS3 is mind-blowing. We've never seen anything like it. Even when we had the Bitmain S miners, there was a slower pace of release over multiple years that was the market could handle. To my extent, obviously owning a large mining company now, as much as I love Kaspa, I'm very reluctant to purchase any ASIC equipment, even though I'm in the best position to do so, explicitly because I don't know what version of equipment's coming out next month.
Nice. Alex, what would stop you from mining Kaspa and just to dump it completely?
I really don't think there would be anything to keep me from not mining Kaspa. There's really nothing. I definitely get Josh's point, but I think from the same perspective that I had, when GPUs come out, right, they're not that much better. The 3090, the 4090.
Yeah, quite slow.
Yeah, it wasn't, the difference between 100 gigahash and 9.4 terahash. But there's a very valid point to what Josh said as far as you don't know what's coming next by Bitmain. But you also have to think about, if you're in Bitmain shoes, you want to keep people buying the original product while at the same time not releasing something that is totally destroys the prior one. So, for example, the L7 by Bitmain, the Litecoin Doge merge miner, is one of the most profitable miners that Bitmain sold because of their margins on it. And they've been somewhat reluctant to release the L9 due to how many people mine Litecoin and Doge. So I think there's always a timing aspect, but I personally don't have any concerns, at least for the next 6 to 9 months, of another Bitmain device coming out. I don't know about Ice River. No one really does.
Fair enough. And can any of you give an example of coins that you mined in the past that you're super excited about, just like we are with Kaz right now, but then crashed and burned and never recovered?
I mean, there was a coin. There was a coin 2 or 3 years ago called Grin. Grin looked fantastic. Grin looked fantastic. Was the most profitable coin for a long time. Interestingly, they had a really nuanced approach to this whole ASIC versus GPU. That coin actually released 2 separate networks. The ASICs were allowed on one and GPU was on the other, and they actually had a weighted distribution of coin release to keep both people happy, which I thought was actually really quite an interesting way to handle it, and it looked like a great project, but for whatever reason that never ended up going where we all hoped it would do. So that would be definitely a good example of one that hit the dust.
So what are the learning points you gleaned from that experience that you can apply to Kaspa and this whole current situation?
It's a tough one, because in all honesty, Grin at the time, given it nowhere on paper looked anywhere near as good as Kaspa did. Kaspa is very much an outlier, and very much why I love it, but compared to lots of other things at the time, Grin ticked a lot of boxes and did look like a great project. So I guess the reality of it is that in a crypto market with tens of thousands of coins, I think we all just have to be educated enough to be nimble and be humble enough to realise when we've made a wrong choice.
Nice. Alex, what are your thoughts to that question? What were you excited about, but then crash, burn, never recovered, and the learning points from that?
Yeah, so, I guess this really... I love GPUs. I really do. It really is. There's nothing that comes close to a GPU from an experience standpoint. And the beauty behind GPUs is you can have 10, maybe 15 different cryptos that you can mine with a GPU compared to an ASIC where you've got maybe 3 or 4 and only one is profitable. So very early on, I started mining Chia. And I wouldn't say Chia is... it's not necessarily a failure at all, but sorry, my mic went off. But it went to a point where it didn't make sense to expand on Chia because the sheer cost of hardware was absolutely ridiculous, and from the growth of Chia, which for me not familiar is hard drive mining specific. And it grew to a point, and the price of Chia is down, 95% or something like that. It's a ridiculous amount. But it came to a point where it got so big so fast, it just didn't make sense to buy a device to support the network, especially when there hasn't been a lot of life-changing, if you will, developments or really massive developments that have made me relook at the utility behind something like Chia. That's just my personal opinion, but that was one of the biggest regrets because I spent probably $5,000 to $7,000 setting up a Chia mining farm, and I did very well because I started mining it within a week of it coming out. But very, very quickly, it outgrew what I could participate with my portion of the infrastructure. And I think you have to look at it very similarly to the likes of Kaspa. It kind of goes back to my prior point that you want to make sure that with the explosive growth of Kaspa, the quote-unquote hype lives up based on the developments, everything else that comes with it and everything else that it can do. It needs to do that, or otherwise you could see a Chia type of situation, if you will.
Okay, so from what I'm hearing, there aren't really, from your perspectives, both of your perspectives, the same threats and downfalls of those of Grin and Chia don't really apply to Kaspa. Is that a correct understanding?
Yeah. My reasoning was certainly different. So Kaspa does seem to sit in its own little world, and there's certainly nothing obvious at this point that 6 years of crypto mining commercially make me look at it and go, that's a bad project. My concerns with Kaspa are the same concern I have broadly for any other coin that was GPU that goes to ASIC. That's a principle of the industry, but it's certainly not a negative reflection of Kaspa and of itself. And the project looks, on paper at this point, one of the strongest projects out there, and we're very excited about it.
Fair enough.
Yeah, I don't think anything from the experience of Chia. It was simply from the growth aspect, because Chia grew very, very quickly. And the problem with Chia is it hasn't delivered to the same extent that a lot of the things it was claiming to be able to deliver. It's pretty much a massive network that's not really currently being quite utilized for the time being. So I think right now Kaspa's right in that stage of really high trajectory growth, and we've yet to really see how it comes out of this growth and when things kind of start to plateau a little bit, because usually things will eventually plateau, or they'll still have, not plateau specifically, but they'll still have a growth, but it's not going to look like the chart right now. So I think that's what really we're going to have to wait, and that may take another 2 to 3 months.
Nice. Okay, so that interesting. So it's 17:34. What I'm going to do, I'm not closing the Spaces session because we've got way more questions to go. I've been furiously typing questions with my wife. I've got to shoot off for a few minutes. So what I'm hoping is that Jim he's co-host as well. So he's got I've sent him a big list of the audience questions that people have put in. So so he'll do that I will be back. But before I go, the last question before I quickly shoot off is alpha time. Both of you, what alpha can you give us that isn't common knowledge to us mere plebs and mortals? Or do you have any alpha?
Ooh,
Don't worry if it's a no.
Put me on the spot. I mean, I tell you what, if we come back to that as the conversation goes on, I'll be thinking of that in the background, but off the top of my head, it depends in what context. Yeah, give me 10 minutes and I'll see what I've got.
Yeah. What about you, Alex? It's a hard question, I know.
Yeah, you definitely put me and Josh on the spot here. Well, I mean, as far as alpha, outside of maybe just Kaspa, but one of the things that I think a lot of people in this, I only knew this because I spoke with a part owner of Bitmain. His name is Michael Liu. He was one of the original investors into Bitmain, and he personally owns 250 megawatts worth of a Bitcoin mining farm that he moved from China to the U.S. in 2020, right before COVID and the whole shutdowns happened. So he kind of gave me some insight on the mining industry and how everything works, how Bitmain operates, and having that kind of behind-the-scenes look was very eye-opening to me, because you'd always heard of pre-mines, Bitmain pre-mining, Bitmain mining with your equipment before they ship it off, and that is 100% true. And so I think one of the things a lot of people don't realize is when Bitmain pre-mines with this equipment, is they mine it, and then oftentimes they'll ship it off after they've mined with it. They overclock, they run these machines really hard. And so usually batch 1 is pre-mined equipment. We saw this with KA3s, we saw the L7s. So there's a level of understanding you have to have from Bitmain side of things that a lot of the times the first batch of equipment has been really rough and tough, and it's essentially refurbished as new. And then outside of that, Bitmain doesn't do a lot of direct-to-customer sales. They do a lot to distributors. So when a client, so let's just say that your regular Joe Schmo goes and they want to go to Coin Mining Central or one of these websites, by the time that they're actually picking up a KS3, it's usually been marked up at least 2, maybe 3 times. It is part of the industry, but what you have to realize is Bitmain doesn't really do a whole lot of it. They ship out, so those 2,500 units, majority of those went to distributors. Then those distributors then sell to the resellers, and then the resellers possibly send it to a local shop or they resell it online. And so by the time it actually gets to you, it's been marked up probably at least 2 times. So for example, if they're looking at a KS3 on, let's say, Crypto Mining Bros, right? Let's say it's $35,000. You could probably get it directly from a distributor for at least $5,000 less. So when you look at that, you multiply that by 5, 10, 15 minutes, you're saving yourself a lot of money, which goes directly into those. When you save money, you make money. And so when you look at it from a retail client, if you're one specific individual and you're concerned about getting your ROI, it's not me, but a retail client that spent $30,000 on one of these machines, how do you get a faster ROI? It's not by getting it sooner, but it's by paying less, by going to the right place to buy it. So I think that really, and these distributors are very easy to work with. And I feel like most people think it's common practice to go to your typical reselling hardware online store and pay a higher price, but it's not. You can work with some of these distributors directly, have an MOQ of just 1 unit, and save yourself $5, $6, maybe even $7,000.
Nice. Awesome. Right. As mentioned, I've got to shoot off for just 3 to 5 minutes. Jim is here. Jim, you're still here?
Yeah, I'm here. So you want me to ask some of these questions?
Or open the floor. Your call, mate. Ask the audience questions or open the mic. I'll be back in about 3 to 5 minutes.
Right.
Go for it, buddy. Jim?
Oh, sorry. Can you hear me?
Yeah. Go for it. You have the floor,
okay.
sir.
Okay, great. So I have some questions here that it looks like Siam got before the space started from some comments, and one of them is someone is asking you guys, how do you store your Kaspa? Which wallet do you use? I guess when you're mining. And Alex, you could go first.
Yeah, so I mine everything directly to my Kaspa wallet. That's there's 2 versions. There's the web one and then the one directly downloaded that you can directly download. I personally do not like storing my crypto in locations where I don't have the keys. It's very simple, not your keys, not your crypto. So I think there's always a risk by trying to mine directly to exchanges or maybe not the safest places, or you're trying to, even to a pool. You'll have pools that may not have your best interest in mind. So even selecting the proper pool is very, very important to mine too. So for me, I hold my Kaspa directly in the Kaspa wallet. It makes the most sense to me.
Cool. Yeah, I use the Kaspa web wallet too. And actually, I saw the other day that Ledger tweeted that they are confirming that they are working on it, and it looks like it sounds like it's coming soon. So potentially Ledger will have an app for it on their device as well. What about you, Easy Crypto?
Yeah, no, there's no. Alex has said it quite seamlessly. I mean, at the moment, that's one of the downfalls of Kaspa is it's a bit of a pain in the ass when it comes to storage, and it's not as interoperable as a lot of other coins yet. But that only creates the opportunity. So yeah, using the native wallets and storing them on desktop and keeping keys is at this point pretty much the best way to go.
Yeah, and I would that a lot of people don't realize this who are new to self-custody, but it is not wise to take your seed phrase and take a photo of it on your phone or email it to yourself or keep it on any like notes application that gets sent up to the cloud or anything like that, because that is a way that you can potentially have your seed phrase stolen. So the best practice is to write it down on a piece of paper and even multiple pieces of paper. Some people even have like engraved cards and whatnot in case there's a fire. But basically, you want to keep those as safe as you can. It's basically like keeping cash in your house, and if you had a fire, you'd lose all your cash. So it's kind of the same idea. And yes, so next question is, how long do you guys expect to make an ROI? You guys may have already sort of answered this indirectly, but someone asked, how long do you expect to make an ROI on a coin that's new, like Kaspa?
I mean, I think that really depends on the equipment you're using and how soon you get into it, right? I think there's a lot of, like, if it's, let's just say a new coin, like when Kaspa first launched, right? A lot of people who mined Kaspa when it was next to zero, when it was fresh off the stove, if you will, a lot of people didn't mine it because they wanted the ROI on it. So you should expect, if you're getting into something, your ROI shouldn't be the first thing that comes to your mind. Having spoken with Son of Attack, who's a good friend of mine, Matthew, he started mining Kaspa probably a month or two after it came out. He's been in it much longer than I have, and we had the similar approach. We weren't in it for the ROI. We were in it because of the technology, and the ROI, if you will, came much after, and it was very lucrative. And I think if you're looking at it from right now, because you can't go back, your standard ROI is at least 1 to 2 years with most devices. And obviously a lot of that changes based on when you buy those devices. It's the same reason that we really expanded our operation in Texas during the time where Bitcoin was at around 17,000, and why we picked up a lot of liquidated miners that Core Scientific, which is the largest manufacturer or largest mining company in the US, they weren't able to make a payment. We stepped in, we purchased those devices for pennies on the dollar. And so a lot of it comes to the point of your ROI is as good as your timing in the market when it comes to the miners themselves.
Yeah, that makes sense, definitely. And sorry, Easy Crypto, what was your name again? Did you want
Josh.
to be called Josh?
Yeah.
Okay, cool. Yeah, what do you think?
No, Alex, again, is a very good point. It's slightly different on the GPU side of things. The kind of fire liquidation price of GPUs does come into place. Prices of cards are generally cheaper when the market's down, but nowhere near to the same extent as the ASIC world. So timing plays some extent of a role over this side, but predominantly, so in the UK mining, any of our clients over the past 4 years received roughly a 270, 280% return at their coins over a 4-year period. So for all, we averaged over 60% over the past 4 years. There was years in there that were over 120%. There were years that were 5 or 6% return. So what people often end up making the mistake of, because crypto unfortunately carries this connotation to people external of it, of course, of this get rich quick, people apply these ludicrous multipliers and I want ROI in 5 months, 6 months, 12 months. Again, the beauty of the communication that we try to instill with our clients is treat this as a traditional business proposition. No business person would ever dream of getting their money back in 8 months, 12 months. They're just unheard of returns in traditional markets. If you can get your money back in 24 or 36 months at large scale commercial investments, that is generally very, very good in the big wide world. So if you set those expectations, historically crypto has outperformed that, and that's often the better way to enter the dialogue than these silly numerical returns that, yes, people have achieved in crypto, but certainly isn't the norm, particularly on the hardware side of things. So we advise our clients on a 3 to 5 year return play, and that seems to be sensible.
Right. Yeah, that makes sense. And then I have a question related to this that I was wondering. I don't think we've talked about it yet, but for those who aren't aware, that Kaspa has a really fast emissions rate and will be fully diluted by 2037. What that means is that every month the black rewards are reducing, and I believe that there's like a full halving actually once a year. So every month they reduce, I guess a 12th, or I don't know what the math would be, whatever it would be, but they reduce monthly until it adds
up. It comes up to about 5% a month.
Okay, great. Yeah, so 5% a month. So it's a very different model than Bitcoin, which has a 4-year halving. So when you guys think about mining, like how do you guys contextualize this based on your strategy? Alex, go ahead.
Hey, I've got to go through airport security again. So, Josh, you'll have to take the next couple.
Sure.
Go for it.
So, I mean, to my knowledge, again, I might be wrong because I can't profess to be an expert in every coin out there, but to my knowledge, I don't know of another mineable coin that has such a reduction in its block rewards. There are certainly other coins out there that have much faster than 4 years. But I certainly don't know a coin that has a consistently reducing emission schedule. Kaspa, to my knowledge, is quite unique in that respect. So it does change the approach of the industry quite substantially, because unlike other very high quality mineable GPU coins like Raven coin or other coins of that nature that are on a classic 4-year block reward schedule, same as Bitcoin, we're in different territory here. So with that said, I don't have any experience to compare what the implications may be, other than just the logic that it's going to accelerate all of these decisions. And this is probably why, when you compare with the accelerated ASIC equipment, there's this kind of big FOMO event going on at the moment, in terms of people really trying to gobble up as much Kaspa as possible. So again, my only concern with that would be to echo what Alex's concerns would be, whether it gets too hot too quickly, and we end up losing steam off the back of that. So in theory, I hope that the emission schedule keeps people's attention slightly warmer for a longer period of time. I just hope it doesn't burn too hot too quickly, and it ends up being a negative rather than a positive.
Nice.
Right on. Hey, Siam, you want to?
Hey, yeah, I'm back, folks. I'm in the doghouse with the wife, but hey ho. Yeah, we've missed the parents' evening. Whoops. So yeah, I'll have to make it up to her later. Am I?
Yeah, we just did a couple. So I just asked how they felt about the rapid reduction rate in the block rewards. So we just
nice.
thought that was a question of mine that kind of piggybacked off another question. But if you want to continue on some of your questions.
Yeah, sure. So Suman wrote in and said, "How do you store your CAS? What as miners, what would you say is the best way to?"
That one we did.
Sorry.
You sent me. Sorry. Yeah. Let's see. I mean, we could go down to the optical mining one.
Yeah.
Or the one about someone asked you, Siam.
Yeah.
Why aren't you mining Kaspa?
Yeah. Very quick answer. I am a techno idiot. I have a curse. I mean, hell, my normal PC is 128 gig RAM, and I've got an RTX 3090, and I can't even run that properly. I can't play COD without having a shit FPS, let alone running a mining rig. So for me, I'd rather just buy the token, sit on my hands, and do nothing, and just watch price go up or down. So yeah, that's my quick answer to that. So I guess Gnome said that if any participants possess knowledge about optical mining, could they outline the process to determine its likelihood of occurring in upcoming years? So this is a new thing for me. Anyone want to answer?
It's not something that I know enough about to give any details on. Really, it's something that I've read as a concept, but don't pretend to understand it well enough to try to explain it to other people.
And Alex is going through security again, so he said he was going to be away.
Fair one. Okay, in that case, Mum and Dad Gaming have asked, how and why is Kaspa mining different to Bitcoin mining? I should have asked for elaboration on that, but yeah, go for it.
Well, I mean, I guess it's different because the emission schedule, as we've just discussed, is fundamentally a different emission schedule. So that is going to change the way, as we were discussing. I think it's quite exciting that it reduces its emissions so quickly, but at the same time potentially carries some risks that it might burn too hot too quickly, and that excitement might not be able to maintain. Whereas obviously we've got another 100 years to mine Bitcoin, and only 20 odd years to mine Cas. So will that make a big difference as the years go by? Is the question to be seen.
Nice. Adam, you said prediction on ASIC prices in the next 12 to 18 months. Any chance to compare that to historical Bitcoin ASIC price graph?
Yeah, I mean that's quite easy to speak to. I mean the prices we don't really even need to look at the next 12 to 18 months. I mean we can already see what's happened in the last 4 months. The prices for the majority of the miners, again, if you look at the KS0, you can pick those up for 25-30% of their original price right now. The KS3s are already half price as to what they were when they were first advertised. So again, this is where my personal concerns for ASICs come in, is that if Bitmain is currently working on a KS4 or a KS5 that's going to be 20 terahash, 25 terahash, then the price of the value of this equipment in 6 months' time is going to be, again, 50, 60, 70, 80% less than it currently is. So it's just a case of, you can pretty much guarantee one thing, and that's that the value of this equipment is going to go down, unless, which we have seen in strict circumstances, unless it is that there is no new ASICs being developed and the price of Cas simultaneously goes crazy. If those two things coexist at the same time, then there is a small window of chance that the machines could increase in value in the short term. But outside of those two things happening, which I don't think are particularly likely, more on the tech side than Kaspa's price increasing, it's reasonable to assume the prices are going to linearly slide down very, very quickly, consistently. And then if a new version of equipment comes out, the prices of the older equipment will proportionally be cut by the same percentage or a similar percentage as the new performative gain of the new version of the equipment.
Cool. So Jeff Dolan has written in and said, can Kaspa act as a public historic ledger on-chain like Bitcoin, or is that something unique to Bitcoin with the longest chain? Store of value versus currency. Are any miners incentivized to store Genesis block to present data? Yeah, I think we covered this in the last space regarding the archival nodes. But anyone else want to talk about that?
Well, actually posted a relevant post a day or two ago. I think it was yesterday. Yes, in Kaspa we don't have an immutable ledger because we prune all the block data. One of the ingenuities we introduced is to have all nodes on the network pruned. And the philosophy is that it shouldn't be the job of all the nodes of the network to maintain the history forever. The reason it happens now, it's because it's a necessity. It's kind of this feature-turned bug thing. Bug-turned feature thing, where it originally was there because that's the solution that they have, and now we have better solutions, but we kind of lost this ledger functionality. And the nice thing is that if anyone wants, they could maintain the entire ledger like in an archival node. And the thing is that you could use any node, not just an archival node, to authenticate the data. So even though, say, just a single person in the entire world stores the ledger, you still don't have to trust them. You can take the data they give you and verify it against any node. Now, what my proposal does is also to streamline the process of keeping the proof. You can essentially, anyone can keep a rather small proof that the transaction was posted within its entire thing. You can post a transaction. Inside this transaction, you can write like any payload, like I guess that in 3 years this team is going to win the NBA or whatever, and then you can keep a proof that could always be publicly validated. So I think this is sufficient for most users, for most applications. I call it a cryptographic receipt. It's essentially like this small piece of data that could be used to indefinitely prove that a transaction existed and accepted long after it was pruned. Right now you can do it. It's not implemented yet, and the proofs are large. It's like 30 megabytes for a proof. But if my proposal is implemented, then such a proof would be like 6 to 8 kilobytes. And I think the next step would actually add this functionality to wallets. Like whenever you have a transaction and before it was pruned, you could click a button and then save this small proof, and then anytime in the future you could use it to prove. So it kind of removes the necessity of having all the nodes in the network have to maintain the entire ledger. So this is, I think, the only way the only approach that can increase trust while maintaining this job of running a node decentralized and accessible to anyone.
Okay, just a quick follow-up question to that, Shai. So, like, I accept Kaspa in all of my businesses, and we've taken, I don't know, only about £10,000 worth of sales in Kas, which is great. But because of the 3-day pruning and whatnot, let's say, I don't know, worst case scenario, one of my businesses gets an investigation. It's like a tax investigation or whatnot, and they need me to come up with, verify, prove to me that you got this in Kas, blah blah blah. How would I go about that other than just showing, the wallet that I just sent it in? Is there a way that an average Joe can download a CSV of that archival node or anything?
So right now there are the block explorers, the public block explorer, they maintain data, and this data is available. You can see transaction data. If you go too early, you can't see them. The thing is, people usually talk about tax and audits, and as far as I know, I'm not a business owner. I've never had to work against any tax agency, especially not outside of Israel. But I always know that you hand them a bunch of receipts, and the main reason they have to believe you that these receipts are real and they are not cooked and they are not forged is because if you lie, you go to jail, right? It's not like they have this cryptographic way to authenticate these receipts. So I don't see how this is inherently different than you say, okay, I got this record, I gave this guy a receipt that he paid me, 1,000 Kaspa. Now, if you do want cryptographic proofs, then this functionality is gonna be available. It's technically possible even today, but it's not implemented, so it requires a lot of know-how to actually do, and it's not optimized. But does it really happen that the tax agencies require a cryptographic proof and not just a written receipt where they trust that you don't lie, because if you do, then you're a criminal?
No, actually, in hindsight, I've just come up with the answer. I was actually involved in a crypto-type court case, and they actually accepted Debank. So I used debank.com, which is like a block explorer for Web3 wallets and MetaMask stuff. And so as long as you can go on a block explorer, etc., like cas.fii, put in an address, and just to prove that X amount landed in your wallet, etc., I think that should be fine. But
you see, they don't even authenticate the data, because technically I could just mount a block explorer and just write whatever I like there. It could be cryptographically verified, but I don't think the tax authorities actually go ahead and do it.
No.
So is this really a concern for tax audits?
No, I don't think so. It's just a random thought part, I guess. So so based on we've covered a lot today, mining and whatnot. So this goes for all of you. So Jim, Shai, Josh, and Alex. are there any questions that we haven't asked yet, but we really should have? Because you don't know what you don't know.
I would like to try and get a gauge, maybe from some of the audience listening, just on. I'm just trying to take myself away from what I know. So let me be clearer. So sometimes you get too close to the wood to see the trees, right? So we all think Kaspa's a great project, really excited about it. But with respect, we're all quite deep in the crypto space. Is Kaspa a strong enough and exciting enough project currently for Kaspa to be, say, the first coin that someone ever buys in the ecosystem? Are there any new people, maybe in this chat or of anecdotal understanding, that Kaspa is their entry mechanism into crypto? Because that would be quite cool to know.
I guess the feedback's going to be a bit delayed because people then have to put their hand up to speak, all that sort of stuff. But yeah, if you want, anyone wants to contribute to that, yeah, feel free.
Well, I think I could say in some way that it was for me. I mean, I was aware of Bitcoin pretty much since it launched. I used it a little bit, and then I saw that things are not working, so I kind of gave up on the whole thing and said, okay, crypto is not going to get anywhere. And I've been like looking around and up to about 2016, 2017, and nothing seemed like from the theoretical point of view, nothing seemed to actually provide solutions that seemed convincing to me. And then Jonathan came up with, he said, I actually solved the trilemma. And I said, no, you didn't. Everybody said you solved the trilemma. Did you also invent time travel? But he convinced me, and he got me to come back because I believe this is actually useful. This could actually interest a lot of corporations and industrialists that gave up on crypto exactly because of the problems that Jonathan managed to solve. So it certainly drew me back.
Nice. That's cool.
Yeah, I think I have something on my end.
Go for it.
It's the conversation a lot of people have as far as, and I think this was briefly touched on, and I might not have been able to give my input, is how do people view Kaspa, right? It's the same way when you look at Bitcoin, right? Bitcoin is viewed as a store of value, and then Ethereum is viewed as, a technology. How do people view Kaspa? Because in many ways, Kaspa has been portrayed as, for a lot of people, whether it's correct or incorrect, is as a new Bitcoin, right? Or a upgraded version of Bitcoin, which would mean it to say, if people are taking that simple approach, that its inherent aspect is a store of value. But is Kaspa essentially a store of value? What if you had to categorize Kaspa into a industry within the crypto space, where would it go?
Well, I would say something about that, and this is just my perspective that I feel like people don't talk about as much as I would like to hear. But what I see is that, especially given that the block rewards end in relatively soon in 2037, is that the ultimate end goal for any of these layer ones like Bitcoin or Ethereum is to, and now Kaspa, is to be able to provide a scalable base layer to host whatever applications that people want to build on top of them, and to do it on the base layer without any L2s. And we know that that's not possible for Bitcoin, and it's not possible for Ethereum because they're not scalable enough. And so if you look at the Bitcoin white paper, which the whole intention behind it was, it all goes back to Bitcoin, was to be a peer-to-peer electronic cash, which Bitcoin was able to effectively send value, a medium of exchange, but not in a way that can be used for daily life to buy coffee or anything, just that you can't wait more than 10 minutes for, right? So if a project is able to add that enable that scalability on the base layer, that's what this whole space, that's what started all of this. And I think people forget that. Like, a lot of people speculate on companies that are, trying to convince everybody that they created some value, when a lot of them are just kind of VC-backed get-rich-quick schemes to try to, people don't really know how to assign value in the crypto space, in my opinion, because they forget where it all started. And so I see Kaspa as providing a really rock-solid foundation for stuff to be built on top of it. And, if you have, for example, like an eBay or a Craigslist type of application on top of Kaspa, someone builds that, they can literally, it doesn't even need any crazy, pyramid scheme, get-rich-quick DeFi apps. It could literally, and anybody listening, if you have the means to do that, because I might want to try to do that, you can beat me to it, but I'm already thinking about it and talking to a friend of mine about it, to create an app like eBay or something where people can send Kaspa and eventually a stablecoin, because once smart contracts roll out, you will be able to have stablecoins on it. And I think that's a better medium of exchange than a volatile coin like Bitcoin or Kaspa. But you could theoretically now, anybody, as soon as somebody's willing to make it, because I think CoinPal offers basically a PayPal type of interface for Kaspa now. Someone could build just get a template and or code it from scratch if they can, and build an eBay type of situation where people can, put up a guitar or whatever they have that they want to sell and send some Kaspa right now, that can be done now before smart contracts. And then you have this instant settlement. But down the road, the scalability is what brings people in. Like, if you have social media application built on it or something with really high volume, you need that scalability at the base layer. And that's where this all started, and I think people forget about it, because anytime you add an L2, a layer 2, you have centralization. Like the bar tab analogy for the Lightning Network on Bitcoin is really just speaks to the whole problem with Bitcoin, because it's the antithesis of what Bitcoin was. And the bar tab analogy is that you're at the bar and you order a few beers over the course of the night, and you open a tab with the bartender, and you don't pay anything when you get those beers, and you just walk around the bar and whatever, and at the end of the night you pay the tab and you go home. So basically you settled that transaction on the base layer, or the bartender is the base layer, the Bitcoin network, and everything outside the bar counter is the L2, and you have to trust that the people on the other side of the bar, the bartender has to trust that they're going to settle up at the end of the night. And Kaspa makes all of this irrelevant, because it can all happen on the base layer. So that's why that's what I see, and that's why that's all I hold anymore. That's my entire thing, and I'm watching the chart closely, and that's all I found what I was looking for, this bear market, and that's why I'm excited.
Nice. Has anyone
I just want to say that making applications, web applications that have access to Kaspa Wallet is gonna be much easier quite soon, because that's part of the functionality that we're working on in the Rust, improving the API, and there is another independent project about wallet browser extension. So with this stuff, you can have web applications that have work with the wallet. You don't need smart contracts for that.
Nice. And in fact, whilst you're here, Shai, could you just explain in 5-year-old English your whip the other day when you were talking about voting and whatnot?
My what? You mean KIP?
Sorry, your KIP, sorry, not whip. Sorry, yeah, your CAS improvement proposal. Your CAS improvement proposal.
Yeah, it's a different thing. The KIP I wrote is not about online voting. It's about the proofs of the cryptocurrency cryptographic receipts that I talked about earlier. That's the content of that key. The voting proposal is not a KIP because it's an independent project. It's not an improvement to the Kaspa code base. Just an idea I had that you could use. You see, think about the Huobi voting that was right now. Huobi voted for what's the next coin they're gonna get listed, and people everywhere could vote. And the second they went out with this voting, I started being bombarded on Telegram with people telling me I can get you 100 million votes, I can get you 200 million votes for $50, for $5,000, this kind of stuff. So this is just an example. The idea is from before that, essentially to use if you want to hold a vote, the vote would still be centralized. You are holding the vote and you decide what to do with the result. There is no on-chain governance that prevents you from doing what you want, but the chain itself would be used for tallying the votes. So it doesn't, it provides like a mild sort of security. I mean, it shouldn't be used to elect the US president, but I think there are a lot of contexts where it is suitable, and the thing is that it provides you what I call linear Sybil resistance. No? A Sybil resistance is essentially something that prevents you from voting 1 trillion times. In Bitcoin, the proof of work works as a Sybil resistance. Now, the best kind of Sybil resistance you can hope for when things are permissionless, when you don't know who the people voting are, is that voting 1 million times would cost 1 million times as much as voting once. If you want to put it doesn't matter how many votes you put in, every vote costs you the same, which is not what happens today, because if you have a vote on Twitter, you can buy 1 million bots for $1,000. The more votes you buy, the cheaper it gets. So I thought you could use the Kaspa blockchain for that. Just for tallying votes. You get this really nice protocol where the tallier can't forge votes. Cryptographically, it's impossible. And they can't omit votes because then people would notice, because all of the votes are recorded on the blockchain. So they would see that votes are missing. And so it's like this semi-DAO thing where still whoever makes the decision has this governance. It's not an on-chain governance, which is a concept I don't really believe in. But you do have to use the blockchain to be able to have votes in a way which is much harder to manipulate. And so I thought about it, I went through the details, and I saw that this essentially could be implemented over Kaspa today. It doesn't require changing the consensus. It doesn't even require changing the peer-to-peer behavior of the nodes. It's just if you write a client for that, then it would work. And I think it could be a really nice project for someone to take up on.
Nice. Well, yeah, amazing. So we're going to have to start rounding things up now. So for all the speakers, that's Jim, Shai, Josh, and Alex. Is there anything you'd like to finish off with? Any points you'd like to make? Anything that you've been storing? Now is your time. Go for it, Josh.
No, nothing on my side actually. I think it's just been a really, really great opportunity to get to meet other people in the space, and I think the fact that the project is where it is and we're so early in the stage and things like this are happening is just a really exciting time. And again, it never ceases to amaze me how awesome a lot of people are from the crypto community. So no, thanks for inviting me on.
Nice, thanks. What about you, Alex?
Yeah, no, I really do appreciate this opportunity. I think it's, the networking aspect and getting, there's a lot of things you don't know that you don't know. And so getting the opportunity to come on this space, having Shai here, having so many other people here as well, people with a lot more time in the industry, a lot more knowledge in different parts of the industry, It's a whole collective of 200, 300 people that have been in this space of learning from people who have experience in different aspects of the industry. In every space, regardless whether it's Kaspa specific, but every space that allows you to learn more about what you're involved into is a huge win. So today I learned a lot of stuff. I expect a lot of other people here learned a lot of stuff as well.
Nice, that's amazing. Yeah, and again, thank you. What about yourself, Shai? Anything else you'd like to finish on? Any other thoughts?
Just my usual shout out to the community.
Nice, amazing.
Nice and sweet to the point.
Legend. And Jim, the one and only. What are your thoughts, mate? Any closing thoughts?
Sorry, my microphone wasn't cooperating. This has been good because I'm pretty ignorant when it comes to the nuts and bolts of mining, and I was just with how they approach it all, and it kind of confirmed my suspicion that the people who are the miners securing the network, running the network, are pretty bullish on Kaspa, and you got to assume that if someone's going to go through all the effort of and spending the capital on acquiring mining equipment, that they have a good feel for what's going on and some experience. So that was nice to hear.
Nice. Yeah. Thank you so much, everyone. And it's quite weird. I'm looking at the charts right now. We've had a bit of an update today. CAS against Bitcoin is now an all-time high. CAS against Ethereum is also at an all-time high, and we're running on to that. But I guess my word of warning is that everyone, especially, this is for lack of a better word, but it seems like this is a little bit of a moon boy community sometimes. And sometimes I see people, having some concerns and whatnot, and they do get attacked. And I think as a community, we shouldn't attack or berate people that have concerns, because you don't know what you don't know, and ultimately it's all a learning process. So what someone may be stuck on, may be trivial for you at some point or now, but I think one of the things I do like is that it is a very helpful community. So we should do that. And I guess my closing thought. Oh, by the way, and I will keep on subtly applying pressure, Shai. It'll be really good to have another Spaces with just you, because I have a million technical questions, and I think that would be awesome. But I guess the closing thought I'll leave everyone with is Cardano. This was born in October 2017. It was launched as a smart contract platform. And then by 2020, it was a $3.8 billion market cap, right? Just normal, going with the flows. A year later, in September 2021, it was a $94.7 billion market cap. And guess what? It still had no smart contracts. So I generally don't think we're going to be around these levels for too long. So thank you, everyone, and I'll do the timestamps as soon as I can. And again, thank you so much for your time. It's very much appreciated. Have a good one, folks. Toodles.
Thanks so much. Take care.
Good night, everyone.
Night.